are you a bit worried about the fact that consumers are slowing down? For HUL, volume growth has contracted. For Colgate, volume growth has contracted. We got a mini profit warning from Jubilant Foodworks earlier this week, and we got one from Specialty Foods last night.
Correct. So all these are, the consumer is the last guy to be hit. So that's what is happening now. So if action begins now, so you will see consumer demand, it'll again revive with a lag. First of all, it has to go down. So all these stocks you will see will get slowly.
You're not surprised? You're not worried?
No, I'm not worried. Because I think that the government is decidedly more worried than what we are. And their actions are revealing that they are more worried. And so I think that's why I'm optimistic for the first time on government action. And so if the government delivers, then the economy will get back on its track over a 12 to 18 month period. And if that happens, then all these stocks will obviously languish for a while, but then things should be okay.
Do you expect consumer names to go through a price-wise correction or a time-wise correction?
I think the price-wise correction has already happened. I think more a time-wise correction from here on. And levers, etc. have reacted because of other issues as well. It's not just slowdown. I mean, it's because of their royalty issues as well. So, I mean, there will be but yeah, I mean, not all consumer names will do.
So what is the best way to bet on Indian consumer? Because we still have a throbbing middle class. The throbbing middle class wants to spend. So consumer romance will not fade away.
So the best way is what I told you last time as well. It's United Spirits. I mean, that's the best stock to buy in the consumer
Expensive
space.
At 1900?
Absolutely not. Because if the debt gets repaid, eventually it will get repaid. And if you add the profits away from the interest costs as well, and assign the similar multiple, you still have a 30-40% return on the stock straight. So, and I think eventually, I dare say that it might become an index play eventually. I mean,
so what is your ultimate price target for United Spirits?
There's no price target.
So just buy it and hold it.
Just buy it. And
so how does one monitor the stock?
The issue is, I would have said you monitor whether the open offer or the Diageo deal is happening or not. I think it looks like it's happening now. SEBI has almost given an approval. So I think now the CCI approval is still left, but I think that should come through. So with that, you are actually will be on a very strong wicket in United Spirits. Beyond that, I would not be too concerned about short-term earnings impact, because Diageo, if once it takes over, will set its systems in place, will do some write-downs. It's not possible that they will not. But as long as the margins they maintain at least to be stable for the next 1 year, then you should be home. Because if the margins don't crack, if you see the margins of that stock, it's earning the margins of a smaller company by the name Global Spirits, which sells country liquor. So that's the margin that United Spirits makes. So it's like ridiculously low.
So margins can expand.
We can expand big time.
Are you a bit surprised with the kind of management commentary we've got from large cap IT companies? The markets were pricing in a doomsday scenario. Then Infosys, they came out with a strong profit guidance. Yeah. TCS is maintaining that business is not slowing down. And we got a similar feeler from HCL Technologies as well.
Now, Infosys is the only surprise here. TCS has always been maintaining that. HCL Technologies has also not been negative. These two guys have been saying that things are not as bad as you guys are thinking. Our business is doing okay. It's just Infosys which has changed. So I think it's more an it's more an Infosys issue rather than a sector issue.
So do you think mood and opinion has changed for large cap IT?
It has. I think so the mood and opinion will now change for mid-cap IT as well. So that space, I think, looks very interesting.
But can IT companies deliver in an environment where rupee, which was a tailwind, now becomes a headwind?
I completely agree with you. The point is the rupee will stop somewhere. I mean, it's not going to finally, you just listen to your comment, what we were discussing just 5 minutes ago, that about the whole issue on India. Rupee will stop at a point. I agree. But I tend to think that stocks over longer term respond to dollar earnings rather than rupee earnings. So the rupee is a short term issue which will hit your stock in the immediate term, maybe 2-3 months. But the point is that if structurally your business outlook has improved, then dollar earnings is what matters eventually in the longer run. And so dollar earnings for IT companies, I think, is going to be stronger.
So for this year, should an investor chase growth or value?
Definitely growth. Definitely.
Why do you say that?
Because, like again, I said that I think the government will deliver this year, and you should also think that there's 6 elections happening over the next over the next 18 months, ending with the general election.
4 this year and then 2 next year.
Correct. That is the biggest QE that can happen in this country. I mean, the amount of liquidity that you will see in the system is not funny. Please go and check last 10 years, 15 years for pre-election rallies. You're always worried about people are always worried about populism, etc. But on the ground, liquidity is awash, and by virtue of that, businesses generally start doing well.
But in general, do you worry about the political environment? Because when I talk to some of your colleagues, everyone is pricing in a near perfect scenario that government reforms will kick in, and somehow everyone is ignoring the political setup.
The government seems to have delivered despite everything. So I guess the
political risk is not a risk.
Yeah, so I guess it's lesser of a risk. It can never be not a risk. It's lesser of a risk. It does not make sense for anybody to oppose the government now, and I think the government has figured it out, and which is why they're going ahead very boldly. So I think they're doing it very smartly, and so people are pricing in lesser political risk. It can hit hard. Risk is there in every market. The biggest risk is if the government backtracks. Now they're on a treadmill. Now they cannot stop. So that's what the investors are telling them. If the finance minister goes around the globe and reassures investors, the investors are reciprocating. They're believing him, and money is flowing through into this country. And so he has to live up to his promises.
What about the political setup? We are no longer discussing Greece. The fate of debt ceiling has not been sealed. There is a political uncertainty which is visible in Spain, and Italy is due for elections later this month. Are we taking global cues for granted?
I would say, I'm not saying anybody's taking it for granted, but what has been taken for granted is that there will be no global collapse. So, Europe has rallied massively last year. The markets have done extremely well. So maybe they will not do so well this year. Maybe the economy will start recovering, but the markets may not do so well. But what people are taking for granted is there will be no global disaster, which is, I think, a fair assumption to make. Which is when disasters normally happen, when you don't expect them. But I don't think people expect any disaster to happen now. That's something like sort of a meltdown of the euro, something like that. I don't think all that is happening.